Joining me now is Robert Pavlik, Senior Portfolio Manager at Dakota Wealth Management. We quoted you earlier. You like Buffett's quote, and it's suitable because today is actually his 92nd birthday, Bob. So now is the time to be greedy when others are fearful.
Yeah, I think the market is trying to reposition for what they thought came out of the Jackson Hole speech. But really, if you analyze that speech, nothing really new came out of it. I mean, we know that we're in sort of an economic slowdown. We knew that the Fed was going to continue to raise interest rates. But yet a lot of folks were looking for a pivot. We never based any of our purchases on a pivot. We've been looking for, further rate cuts, but some of these rate cuts to sort of minimize as we go forward and then an eventual pause.
Right. So then what were the markets going on? And I know we've talked about this a lot over the last few weeks. Markets seem to get ahead of themselves. But at issue there was the Fed's credibility, right? How's that changed with the latest speech that we heard from Fed Chair Powell?
I don't think so. I think the computers, I mean, we have a very quiet week, very thinly traded. Yesterday was like one of the slowest volume trading days of the year. We had only 800 million shares trade last Friday. And so you had the traders and you had the algos really sort of setting this market off down 1,000 points in a single day for what was, again, no new news. The Fed is working to slow the economy. And that's the right thing to do here because we have a supply-demand issue. We don't have enough supply to match up with demand. And we have inflation as a result of that. And people are running scared. But, some of these tactics that the Fed has taken have actually helped. I mean, commodity prices are down. Housing is slowed. Retail sales, especially as it applies to apparel, has slowed. And we just need a little help on the jobs front. And I think that's coming, especially with the recent announcements of layoffs.
Right. So, Bob, given that backdrop, what are you buying now? We've talked to a number of people who actually like tech at these levels, even though if you think rates are rising, that may not necessarily be a good thing.
No, I agree. There's opportunities, but you have to be very selective. I'm not saying go out and buy every 5-letter pink sheet stock out there. But I think if you take a look at some of the opportunities that are being presented, a company like AutoZone, it's a DIY company, so it's defensive at a blowout quarter. It dominates their space. Starbucks, which has great management, incredible customer loyalty, strong demand. And then Jack Henry, which never gets mentioned on air. It's under radar tech. It's a necessary product, highly rated by both customers and employees. So 3 great companies, all looking pretty good, all with at least 18% upside. And
Bob, what about with Starbucks? We talk often about the labor issues that the company is fighting. That doesn't scare you off the stock at all?
It doesn't, because it's not across the board. I can understand, but Starbucks is having trouble attracting employees, but really sort of, who isn't right now. But I think that problem gets resolved as, we get a little bit more further rate hikes and people start looking for jobs and applying for jobs that they might have been passing up before.
Yeah, we're going to talk lots more about that in the show. Thank you very much, Bob. Robert Pavlik with Dakota Wealth Management.